Well, welcome everyone from around the US and around the world. I appreciate everybody joining us today. I'm Brian Greenberg. Hope everyone is staying safe. It's obviously unfortunate that it took a pandemic to get us together in this sort of a webinar for this webinar. But the good news is at least we're not watching more episodes of Tiger King. So we've got that going for us. As many of you know, I run Greenberg Advisors. We're a boutique M&A advisory firm based out of Washington, D.C. We specialize in a few industries. Revenue cycle and healthcare IT are the vast majority of what we work on a daily basis. And so we thought that it might make sense to get everyone together in this sort of a setting. Really just, it's Q&A. There's no particular agenda of any type. We've taken all of your questions, or I should say everything we talk about today will be from your questions. We may not get to all of them, but nonetheless, a lot of people have sent us questions since late last week and have continued to do so all the way through just an hour or two ago. Feel free, while we're together here for the next 15 or 20 minutes, to submit questions in the Q&A window that should be on the right side of your screen. We've set that up so it's private, so your questions won't be public. It'll just be between you and me. So with that said, let's just hop in. There was a lot of overlap in the questions, and this was one of the big ones. So why don't we start with this? The question is, are deals being completed? The short answer is yes, absolutely they are. We completed one of our transactions just a few weeks ago, and many have been completed since then and continue to be. We've seen many deal processes put on hold as a result of COVID-19. It really kind of depends more upon, it's not an across-the-board action that buyers and sellers are taking there. It depends on where the transaction is. For example, if it's already under LOI, those transactions have the best chances of being completed according to the terms and specifics set out in the LOI. However, if a deal was in the earlier stages, terms hadn't been agreed upon between the parties and so forth, those are the kinds of processes most likely that are being put on hold. We're going to see the pace of deals, and have seen in some cases the pace of deals slow. Understandably so. Buyers need to understand the impact of COVID-19 on the seller's business. Certainly site visits and in-person meetings and management meetings that are all part and parcel to the diligence process, those are all being done online right now. We're doing that in our transactions, and I think most people are kind of taking that route just to keep things moving in the right direction. The fact is, if a seller's business doesn't support the agreed upon price and terms, then certainly there's going to be a discussion around what that price and what those terms ought to be. But in the case where the seller's business does support an agreed upon price and terms, then there should be no changes to those sorts of deals. It may take a little longer to get done, but if everybody's still committed to it, we see those deals getting done nonetheless. By the way, welcome to my living room. I don't invite too many people in here, or I should say my family room. I don't even know what room I'm in, but working from home, as most of you, I'm sure all of you have been doing for the past few weeks. So just getting accustomed to the new norm here for a little while. So let's move on. Question 2, how will deal structures change going forward? I would say there are a couple ways that are evident at this stage. I think we'll see a lot more earnouts in deals. Just simply greater risk and uncertainty around how the pandemic may impact certain businesses, and it allows everybody to true up the risks and rewards. Again, if there's already a deal in process and parties have already agreed to terms, this is not necessarily something that will or should be implemented. It's more for earlier stage deals. And then lastly, I would say there'll be a lot more attention on MAC clauses in purchase agreements, or material adverse change clauses, given what's happening now. So what is the near-term and mid-term outlook for M&A? The near term, I see volume being down significantly over the next few months. Not zero, but not 100% either. And then in the midterm, I would certainly expect that to rise. M&A in the meantime is going to continue. Good deals where the parties agree are going to get done. A big question for a lot of people about funding. Is funding available? And on that front, I would say, traditional debt markets, as many of you probably know, are fairly well frozen right now. The bright side is some firms don't need debt in order to get deals done. Some private equity firms and other firms have private debt funding in place, so they're fully able to do the deals they would otherwise do. And others have said to us, and over the past week or so, that they'll just fund deals and go all in on equity and refi it out later once the debt markets loosen up. So, there's funding there for some, in summary, and for others, it's not going to impact how they do deals. In fact, we talked to one firm just in the last few days that said during the last financial crisis, they wished they had done more deals with all equity and refied them out later. So I think we're going to see a lot of that going forward here in the near term. In any event, there's plenty of equity in the markets. We have started to hear a little bit, from private equity firms that LPs aren't fully committed to, the financings that they had committed to. In other words, they're sort of pulling back on some of those commitments. I haven't heard that too much, but I've heard it a little. So take that for whatever that's worth. In the end, I think it's safe to say that for those with funding in this market, we think there are a lot of opportunities out there. So how will COVID-19 impact valuations? I'd say at the least, it will cause buyers to take a deeper look at the deals they're currently involved in. I really see this pandemic's impact as much more a question of structure than valuation, and in some cases, no change whatsoever. It really just depends upon the seller's ability to sustain their business in the current environment and achieve the projections that it's put out there, along with the buyer's ability to fund the deal. It's as simple as that. If those things are in place, then I wouldn't expect any changes to any deals that are currently moving along. And in terms of the long-term impact, we just have to wait and see. I don't have an answer on that one, but we'll see when the lending markets come back and how that looks. I don't expect it to change valuations in any dramatic way in the long term. I think they'll go right back to where they were, frankly. For deal processes that were postponed, when do you expect them to come back to market? Great question. So, we think that most deals are going to come back to the market in the next 30 to probably 45 days or so. Most experts believe that the economy will at least start to normalize by early June. And so if that's the case, given the time that it takes to put a deal together and get through the early stages, we see bankers coming to market in the next 30 to 45 days with the intent that by early June, they'll already be in full swing in their processes, moving through some of those early stages, conversations, confidentiality agreements, and so forth. Let's see, next question, moving along. Are buyers still buying? I think I've sort of already addressed that, but I can touch on a few other things here, I guess. I kind of look at the buyers as two different buckets. There's the private equity buyers, and then there are the strategic buyers. Certainly, sometimes there's overlap between them. Nonetheless, the private equity firms that we've spoken to are really mostly just so focused on their portfolio companies right now and making sure that they're doing well, that they're supported, and that the private equity firms are protecting the investments they've already made. Many of them are not investing into new platform companies, although many are, and all of them, from what we've seen, are still seeking add-on acquisitions for those portfolio companies. So the interest in transactions has not waned. Certainly, they've got private equity firms. Many of you who are joining us today on this webinar, you've got a lot on your plate, but it sounds like from what you've told us, you still want to see more, and you're willing and ready and able to move on other deals. So that's good. The other side of the buyer pool is strategics, and we think all strategics that we've talked to, they're all full steam ahead with transactions, and of course at the same time they need to really tend to their own business while they're doing that, but they are. So let's see, next question. Have you seen anything to indicate a change in a provider's need for an RCM solutions? Yeah, we have actually. So we've seen providers increase the scope of some of the work that they outsource, which is in some cases creating revenue opportunities for vendors. So for example, companies that are working insurance claims, they've seen some programs expanded. Maybe, if they started working at day 90, some providers are moving them up to day 60 now. So, the providers don't have the human resources that they would typically have. So labor shortages as well. They've got increased volumes because of everything going on. So it is creating some opportunities for revenue cycle companies. It's nice to have a silver lining out there sometimes, right? Next question. Are there any business models that you think are more insulated? I do think that IT-oriented businesses and businesses that have an elevated level of automation are much better insulated. They've got a better chance of maintaining clients and performance. And simply put, service businesses have many more obstacles for all probably obvious reasons that we all know. Should we be tracking, here's the next one. Should we be tracking anything now that will be helpful later during a sale process? To that, I say 100%. I think you should be tracking all the one-time expenses that are related to the COVID-19 crisis. For example, if you had to buy a whole bunch of new equipment and hire IT specialists and so forth to get your whole staff working from home, capture that, track it, see what those expenses are on the other side. Track any metrics that point towards revenue impact or a hit to revenue. Track employee turnover and absences related to the pandemic. Track all productivity metrics. I mean, really doing all of these kinds of things is going to help buyers understand later what was kind of the core business versus what was a one-time COVID-related impact. And I think that's going to be important for you to be able to delineate. Next question. What are sellers doing and what can they do to better position for the future? I mean, the facts are the facts, right? Sellers are just trying to make payroll, trying to keep their employees on board, trying to keep clients happy and retained and so forth. And, at the same time, trying to set up their staff and their whole operation on a work from home or telecommute basis. It's a lot, to say the very least. In terms of what they can do to, plan for the future, I think they should look at these events, look what they had to do, put something better, more efficient in place for the future, something that they can toggle on very quickly. If there is a bright side, a lot of us have already made the investment as a result of the past few weeks. So we'll be better prepared for the next time. But really just automate as much as you possibly can, implement IT wherever you can, and I think we'll be better off if this were to happen again. The next question is about buying companies. So are there more opportunities now for purchasing small mom and pop RCM firms? Yeah, there definitely are. I mean, these are, firms that are just generally less automated and maybe less equipped to handle what's going on today. So they're going to have as much or more difficulty than, the other firms, larger firms. But these are great firms. They've got great people, great clients. They may have a very regional or local touch that you're looking for in your business. So I think there are opportunities out there in the market. All right. Is there anything specific a buyer should consider when evaluating acquisition targets now? Yeah, so I think what you want to do, it's going to be fairly easy to see the revenue and profitability trends, but look to the next layer, try to assess why those changes occurred, and whether they're one-time events or whether they're really persistent issues in the business. For example, on business development, we all know the painfully long sales cycle that exists in the industry. If we're not doing our business development throughout these days, weeks, and months, in all likelihood, that could impact future growth in some ways. And so I think what you want to do is maybe look at historical pipelines and compare those to success rates from then as well as now, and that should give you some sense of what to expect. Let's see, should I wait to see how things shake out before pursuing a sale? That's a good one. And to that, I'd say it depends on how your business stacks up relative to a lot of the things we've already discussed. Certainly, you can't go wrong waiting a few weeks to see how things develop, for example, but you could also use that time to your advantage. You could start talking to your advisor and just kind of see what kind of feedback they might be able to provide, which can help you make decisions about what's next and when makes sense for you, your business, your family, and so forth. But as I said before, I mean, deals will continue to happen. They may look slightly different than they did in the past for a short while, but they also may not. And then I've got one more question here that I think we've got time for. Will COVID-19 accelerate the trend towards more remote coding and coding outsourcing? And, look, I think the push towards remote coding was already happening. So yes, this probably is a catalyst for that to happen. I think that's just one example. I think it's going to accelerate the movement to more remote, automated, outsourced functions overall across a variety of industries, certainly within revenue cycle and healthcare IT, but a variety of functions and so forth. So in the end, it should make us stronger and better and more efficient and probably more profitable. It's going to take a little while, clearly, but in any case, that's the end of the questions that I've gotten so far. And I think we're running short on time as well. So I think I'm going to end things here. If I didn't get to your questions, or if you posed questions in the last minute or two that I just haven't seen yet, please do feel free to reach out to me by email or phone or whatever. We can talk one-on-one or find a way to get you some answers and get you some feedback. Look, meanwhile, I hope everybody stays safe and stays healthy and follows the experts' guidance. And again, take care of yourselves. Hopefully we'll talk again soon. Thank you.